Good morning, traders. Today is the 20th of December. My name is Neville Hornsey, market analyst with YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing, Joel?
I'm good, mate. How are you doing?
Yep, it's the run up to Christmas, so the family's getting super excited. The markets are moving. What's not to enjoy?
Yeah. Yeah. Well, just the spread of Omicron in our country.
Just like...
But I don't know. Do you know anybody that's had it yet?
No, my little one's got chicken pox and he started sniffling and coughing a lot. So I'm loath to get a lateral flow test, but he might be the first in the family to get Omicron. But I don't know anyone that's actually got Omicron at the moment.
Yeah. Oh, yeah, true. Actually, I don't know anyone who's confirmed. Well, yeah, a couple of my mates in London have got COVID, but they don't know if it's Omicron because they tested positive on the lateral flow tests.
But it is the dominant one.
It's like, man, everybody in London's got it.
Yeah, I was going to say, like, Sadiq Khan did a, emergency, state of emergency or something?
I'm not really sure what difference that makes, to be honest.
I think it means the government has to offer support. In like, if it was like a terrorist attack, the government would have to like get involved. Like they'd all have to work, all the agencies would have to work together. So that's the way I see it.
Makes sense. But yeah, Omicron is definitely the driving theme this morning, isn't it? Like just looking, you got stocks lower in Europe, US futures lower, crude oil lower, yields lower, and everyone's just talking, Omicron.
I guess it's a short week.
Now, there are a few bits. Let me pull up my calendar. So on the most important thing we got on Tuesday is the RBA policy meeting minutes.
Yeah.
Which the RBA is interesting because they've been one of the more reluctant of the G10 central banks to sort of pivot hawkishly. And they've slowly begun that pivot. Like you remember, they brought forward their guidance on rate hikes from 2024 to potentially 2023, but that still leaves them way behind, the Fed and it doesn't leave them behind like the SNB, the BOJ and the ECB, but the rest of the G10 central banks, like they kind of are behind. So we're waiting to see if they can do some more catch up. So anything hawkish from the minutes would be interesting. Also, recent data out of Australia has been very, very strong. So it's kind of like everyone's expecting a bit more of a hawkish shift in the next couple of meetings.
Yeah.
So if that doesn't come, that would be disappointing.
What I think might happen just technically, the 0.7,
like
the big figure has been tested a couple of times on the monthly candle. So I'd imagine if there was a hawkish sort of tilt, that we might sort of sweep those lows and then go and test a high, but then if it's dovish, then those lows just disappear back down to 0.64 maybe. But
looks like a bit of a head and shoulders, doesn't it?
Well, I think it needs to build a bit more of a, if we're going to go like the head and shoulders sort of inverse route, then I think it needs to build a little bit lower. Like if you look to the left here, January 2016, they often like to retest those sort of levels. So 0.68 down to the top of that candle there, like 0.66 basically. So yeah.
Okay.
But yeah, like up here, there's obviously like a massive resistance at 0.8. So at some point they're going to test it. They just need some economic drivers. And like you say, maybe they're coming because, it sounds like they are.
Yeah, I mean, the big difficulty for all these dollar pairs is the dollar side of the equation. Because I don't know if did you catch this on Friday evening? It was quite late. A lot of people might have logged off by then. It was about 6 or 7. I was still working. But Fed's Waller, Christopher Waller, he was talking about how the main reason why they accelerated the QE taper last week was so that the March Fed meeting would be live.
Yeah.
So that really got speculation going for a March rate hike.
Yeah.
Obviously, this week we've got core PCE, which is the Fed's favored inflation gauge. That's on Thursday. That's kind of the only other really interesting data point for me this week. The problem is there's these negatives that are coming together. So there's this, I don't think if it wasn't for Omicron and all these COVID worries, that are dampening the near-term economic outlook. I think markets would probably be able to put up with this slightly more hawkish Fed, because I think most people probably think this policy shift from the Fed is actually appropriate. Like, look at inflation, they have to do something. It'd probably be worse if they didn't, because then you would really be risking price stability. But then people go, oh, but we've also got Omicron spreading and we've got potential lockdowns and stuff. And they start getting in that mindset where, oh, we want as much economic support, like through monetary policy, as possible. And then if they're not getting it, then, you know, it creates this kind of situation, which we're seeing this morning.
It'd be interesting to see if the UK, the US do a kind of furlough 2.0, or whether they just put us all to the wall and see who sort of gets shaken out, because it doesn't sound like there's going to be a lot of extra help.
I think that's more likely, to be honest, because the era of paying people not to work, I think, is kind of over, because now we're seeing when you reduce the supply side capacity of the economy through, you know, furloughing people, telling them not to work and stuff, and lockdowns, but then you maintain the demand side of the economy by giving the people that aren't working money. Well, then you have this big imbalance that creates inflation, which has obviously been the main driver of inflation. So I think there's a big reluctance to go down that route again. Look at these long bonds moving higher.
Yeah, they are, but they're also like trading within a massive range from November. Like the weekly range on November is almost like a full inside bar last week, and we're still within that week. So big consolidation there. I don't see that moving for a little while until, someone makes a firm decision on the Build Back Better, at least. What else we look at?
Yeah, I mean, that looks like a no, doesn't it? The Build Back Better, because Manchin is the kingmaker when it comes to that, isn't he? And if he says no, none of the Republicans in the Senate are going to vote for it. So, yeah, it's a bit devastating for Biden, because Build Back Better was going to be his main thing, really, wasn't it?
Yeah, it just feels a bit more like the Obama sort of time now, where Obama had all these great ideas for sort of, Medicaid and Medicare and things like that, and they just kept on getting pushed back. Yeah, so like the dollar index,
nice,
still riding up near 96.5. It's been in that sort of range, 96, 97 for a long time now. Well, over a month now.
I mean, it's got everything going for it this morning, hasn't it? It's got, the hawkish Fed, like we were just saying last Friday, and the hawkish pivot from the Fed last Wednesday, doubling QE pace, talking about 3 hikes in 2022. Then you got Waller on Friday talking about a hike as soon as March. Now you got risk off, and people do still tend to favour the dollar as a safe haven, particularly if the Fed is going to continue to be hawkish.
Yeah, that's seen in Turkey as well. Like the lira being like absolutely destroyed, but people moving into like the US dollar and gold. That's a real if anybody wanted to know when dollar and the gold become safe havens, it's when there's a massive flight out of a country, worth of currency. So
the CBRT cut rates again, another 100 basis points last week, which I think there must be either 14 or 13%. Let me have a quick look.
Yeah, but I mean,
CBRT rate.
In one way, like I understand,
but their inflation's at 21%. So it's like, what are they doing?
Yeah, but I can see, like, when he says raising rates imposes price increases on people, that's true. But when there's no confidence in the government, then all of that money is just going to leave the country, and that's what I think we're seeing right now.
I think one of the things that he thinks, because he doesn't know anything about economics, he's completely economically illiterate, is President Erdogan. What he does is he looks at countries, or he looks at the Eurozone, and he goes, they've got low inflation and low interest rates. And then he looks at other developed markets, and he's like, they have low inflation and low interest rates. Therefore, I must lower my interest rates to get low inflation. It's like, no. We're a very different stage of economic development to you, Turkey. It's completely from we're like our growth, like our potential for economic growth is quite low, because we're already very much like capital intensive countries. We've got negative demographic trends. in the long term, which is weighing on our inflation, whereas Turkey's got all this scope to continue to grow. I'm not sure what the demographics in Turkey are like, to be honest, but I imagine they're much more positive still than in like Europe. And yeah, I mean, it's as simple as, when you lower interest rates, you encourage borrowing and consumption, which boosts inflation. It's as simple as that. And then if you want to do the opposite, you have to do the opposite.
No, definitely. But I just think now it's got to the point where, I mean, I don't know where this ends, because, you know, he's a dictator as such. And if people don't believe that their money is safe in that country, they're just going to remove that money from that country or stuff it under their bed full of gold. So
I think it could potentially go towards like capital controls. So, you know, you have, you know, Argentina, for example, there's like a managed decline in the dollar Argentino peso rate, which pretty much goes in line with the inflation differential.
Yeah.
But
Argentina,
you know,
also,
obviously
like,
there's capital controls.
But Argentina also like take on lots of debt in other people's currencies. So they'll take on lots of debt in the US dollar, and then they're beholden to, you know, if the US dollar goes up in price, then their debt goes up in price. So they have to default. So right. So last week was big because it was all central banks. We kind of know that the ECB aren't going to be raising rates in 2022. We kind of feel like the Fed will be in March. So the euro versus the US dollar should we just keep coming down now, yeah?
You would imagine. I mean, what are the upside risks? And I would think that the upside risk would be anything that would make the Fed delay that timeline. So I think you could still, even if the Fed doesn't hike in March, as long as they look on course to hike at least by May, then you can continue to see the dollar strengthening versus the euro. But if anything happens that pushes it back any later than that, well, that would be much less dovish, much more dovish than what market's currently expecting. So then you could see euro dollar moving higher potentially. But I personally don't think that's going to happen. But, you know, we need to be on guard for that kind of stuff, don't we?
Anything you want to say about gold or not?
Yeah, what to say about gold? I mean, the big thing is long-term US, like we've just been looking at long-term US government bonds, but yields very much remaining subdued because of worries about the long-term economic outlook for whatever reason, because the pandemic's still here, because the Fed started to turn hawkish, which some bond investors seem not to like. So that can underpin gold. But if the dollar keeps going higher, if the hawkish Fed does drive real yields higher, then it's just, I don't really see the massive bull case for gold at the moment.
No. Yeah, personally, I think the inflation sort of side of gold is inflation worries. Like if there's rising inflation sort of expectations, then people move into gold just to try and mitigate that. But then the rest of the time, it's kind of, if the economy is doing really well, then there's more industrial use. And then people have got more money in their back pockets, so they can go out and buy jewelry. And those are the sort of two major cases for holding gold then.
If there is an economic catastrophe, gold will save you. Like, it just will.
But as you see in Turkey, yeah. But
if there, well, exactly. Yeah, exactly. Or there's so many other countries where people that have been able to hold on to their gold, it's been a lifeline for them.
Yeah.
Yeah.
All right. Okay, so it's a quiet week, then it's Christmas. I hope you have a great Christmas.
You as well.
And
I guess we'll speak. I don't know if we're doing next week's one.
It's a bank holiday, isn't it? So yeah, maybe not. But,
bank holiday.
Well, the next time I see you, it'll be
maybe in the new year.
Yeah, exactly. Well, have a great holiday.
Merry Christmas, mate. Happy New Year as well.